Alright guys, welcome to Chart Nexus and my name is Darren, and today I'm going to be sharing with you about a topic called support and resistance. Now, although it is a fundamental basic when it comes to trading to be able to identify the support and the resistance, a lot of traders still find it difficult to properly identify the right support levels and the right resistance levels. So today, that's what I'm going to be sharing with you about. So let's start. So let's talk about what exactly is support and resistance. Support and resistance is basically an area where where there is either a large number of buyers or there is a large number of sellers. Now, what do I mean by that? Let me just illustrate it to you. So, for example, if a stock is selling down and starts to rebound off of a particular level, we can say that this level is a level of support. Now, what this is happening is that there is a lot of buyers in this area waiting to buy up the shares whenever price comes into their area. So this means that there is so many buyers here waiting to buy the shares that any selling pressure that came before, the buyers were able to overcome it, absorb it, and buy up the shares, hence creating bullish momentum, allowing the shares to rebound off that level. Now, the same can be said for resistance when there is buyers pushing the stock up and comes into a level where there's a lot of sellers waiting to sell off the shares. The sellers will be able to absorb the buying pressure that came before and push the stock away from that level, rejecting the stock from the resistance. All right. So this means that the sellers are absorbing the buying pressure, rejecting the buyers, and pushing the stock away, creating bearish momentum such as this, and this, pushing the stock away from that level. All right. So let me just remove this. Now, an interesting phenomenon that happens with support and resistance is that when when a resistance is broken and the stock goes higher, and whenever the stock comes back to that same level now acts as a support. Now, the same can be said for a support when broken can act as a resistance. Now, what do I mean by that? Let me just draw it out. Say we have a resistance here that was once rejecting the stock multiple times, but once buyers were able to overcome all the sellers in this area and breaks out and comes back to retest that area now acts as a support. Okay, this means that now all the buyers will be waiting in this area to buy the shares if the share ever comes back into their price point. All right, so this is just something to keep in mind. Now, if you don't really understand what I'm talking about, we can look at some live chart examples and then you'll see what I'm talking about. All right, so first off, we have Server Dynamic. As we can see, this was a good area of support. Now, why do I say that? Is because we can see that whenever the stock comes back down to this area, it rebounces off the area. Say 1 time, 2 time, 3 time, 4, 5, 6, and 7. So this means that there is a lot of buyers in this area just waiting to buy more shares. That's why when the stock ever comes back into this level, the buyers will be able to overcome all the selling pressure that came before and buy up the shares. Now, whenever buyers are more than sellers, the stock will push up, right? Supply and demand. Another example we can take a look at is RubberX. Okay, as we can see that this is a good level, whether it be support or resistance. But remember what I said about how a resistance can become support when broken and how a support can become a resistance when broken? This is actually a perfect example. Okay, as we can see, what was once a resistance rejecting the stock here and here, once it breaks that resistance and the stock comes back down into that same level, the same level now acts as a support. As we can see here, here, and here. Okay, this means that all the buyers, after breaking the resistance, is now waiting in this same area buy the shares. All right, but we can also see that once the buyers were not able to absorb all the selling pressure and the sellers were able to push the stock past the support, the same support now becomes a resistance, as you can see from the rejection here, 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 and I think we can consider here. Okay, so this is a perfect example of how a resistance can become a support when broken, and how a support can become a resistance when broken as well. All right. Now, if you're still not sure what I'm talking about, we can take a look at another example. LB alone. Now we can see that this is a good area of what used to be a support turned resistance. As we can see, when it was above this level and recognized this level as a support, rebounding the stock off of it, once the sellers were able to break past the support now acts as a resistance, rejecting the stock multiple times. So this is what I mean by how a support can become a resistance. So let's begin by talking about how we can properly draw a support and resistance. But before that, let's look at an example of how you should not draw your support or resistance lines on a chart. So this is an example of what you should never do to a chart when you're drawing out your support and resistance levels. Okay, because if you do this, you're only going to get a very cluttered chart, and basically every little price point is going to be a form of support or a resistance. So how are you going to make a decision to buy or to sell? Okay, and so let's not do this. So with that said, how are we going to draw a good support and resistance level? First off, we want to get as many touches as possible. Okay, so what I mean by that is, say we have a stock that shows you something like this. Now, where would you draw the level? Now, I would draw the level somewhere like this, because roughly it has 1 touch, 2 touch, 3, and 4. Now some of you may say, why not take the lowest point, which is basically this area I was trying to draw. Why not take the lowest point? Well, yes, you can, but I want to get as many touches as possible so that the support, the level, is more significant. All right. Now, another thing is that you want to look at levels where price shows a rejection, meaning you want to see that price where it goes into that level shows rejection, either in the form of a rebound or a rejection off of a resistance, like what we just said. All right, and we can also sometimes consider the recent extreme highs and lows, like what I just said, but it's only in some cases that this would be considered. So let's take a look at some examples again. Let's go back to Rubberex. Okay, now as you can see, let me just remove all the highlights. Now, why did I choose this particular level as a support or resistance? Well, because you can see that it got 1 touch here, 2 touch, 3, 4, 5, 6, 7. So you managed to get 7 touches. So we can see that this is actually a very good level of support or resistance. Now some of you may argue and say, what other levels we can find on this chart? It can't just be one. Well, that's true. We can also take levels such as this level right here, because we get at least 2 to 3 touches. Okay, yeah, I forgot to say that when we draw support and resistance levels, we should aim to at least get 2 or 3, depending on the situation. Sometimes 2 can be considered, but for it to be significant, it needs to at least be 3. So here we have 1 touch here, 2, we can say it's 3, 4, 5, and so on. Alright, so we can actually say that this is also a good level of support or resistance. Okay, so let's look at another example. Now, here we can actually see that this is a good level of resistance. Now, why do I say that? We can see that whenever the stock price rallies up to this level, it always shows a big rejection, as we can see with the big long tail here. Okay, so it means that the stock comes into this level and the buyers will quickly sell off their shares and push the stock away. As we can see, it did that once, twice, and 3 times, and 4 times before finally breaking out of that resistance. So we can actually mark this point as a strong resistance because it is sort of like the extreme. Okay, now another example we can take a look at is UWC. Now remember what I said about how sometimes the extreme lows or the extreme highs can be considered as well? Well, this is what I mean. As we can see, that when the price rejects this level and starts to sell off, it quickly found a support in this level. Alright, and we can see that it rebounded very, very strongly and it went up this much before coming back down again. But what we can see is interesting is that when it sold off again, it found the same support at the same low that it used to rebound off of. Okay, as we can see, it's the same lows. So this is also an interesting phenomenon that sometimes the extreme highs or the extreme low can also be considered to be a very strong support and resistance level. But of course, support and resistance levels are very much often areas, so we should also take that into account. Okay. Now another example we can take a look at is VIS. Okay. Now VIS is also another example that we can see that this was a strong resistance point. As we can see, the stock came up to this area, rejects aggressively, goes up, rejects aggressively, rejects aggressively. And as we can see, this is also a point where it has been touched in the past as well. But remember what I said, that usually we should take a point and treat it as an area. So that's what I mean. So sometimes the stock can go past a certain resistance point by a little bit, but it's not an actual breakout. Okay, so that's why we should always consider it as a area. Okay, as we can see, the stock goes up to this area, rejects off of it. Alright, and then when we can see that when this resistance is broken, as we can see with this candle right here, and comes back to retest the same level, this level holds firmly as a support. Seeing how the lows are all forming the same lows in the same level. So this is what I mean by how a resistance can turn into a support. Right now, you should have a right idea about how you're supposed to draw your support and resistance lines. But let's look at some important things to remember when it comes to drawing your support and resistance lines. Now, support and resistance should not be treated often like brick walls. They should often be treated as more like a flexible barrier, meaning the stock does not go and rejects often off of a specific price point like a brick wall. So it's more like a very flexible barrier. So sometimes the stock can go a little bit above or go a little bit below the support or resistance. So we should treat it as more like a flexible barrier pushing against it, slightly above a resistance or slightly below a support. Another thing about support and resistance is that it is very subjective, meaning that if you give 5 different traders the same chart, the 5 different traders will give you 5 different levels of support and resistance. So it is something to keep in mind that you should not be caught up too much into trying to identify the same levels as other traders. Alright? So other than horizontal support and resistance zones, there are also other forms of support and resistance as well, namely trend lines and EMA or MA lines. Now, what is trend line? Trend lines is basically a sloping support or resistance. Now, what I mean by that is when a stock is on an uptrend forming higher highs and higher lows, we can actually look to connect its lows. Sorry about my drawing, but you get the idea. We can actually look to connect its lows acting as a uptrending support, basically. All right, by connecting at least 2 or 3 points of its lows, we can actually know that when the stock is likely to rebound off of when it comes down to that trend line again. Now, the same can be said for a stock coming down from a downtrend, making lower highs, lower lows, lower highs, and lower lows. We can connect its highs, which will act as a downtrend resistance. All right. So on an uptrend, you look at its lows, and on its downtrend, you look at its highs. Okay. So we can know when the stock is likely to reject off of whenever it's making its high again. All right. Now, EMA and MA is basically an indicator that gives you the average of the stock, the average price that the stock is currently trading at given its historical candles. Okay, but I'm not going to go too much details into it, as we can leave that for another video. All right. So if we don't know what I'm talking about, let's look at some charts again. So here we have Tasco. Okay, and as we can see, it is on a long-term uptrend, and we can actually look to connect its low. Now again, guys, this is very when it comes to drawing trend lines, right, you shouldn't force it. Okay, don't ever force a trend line onto a chart. If it's there, it's there. If it's not, don't force it. Okay, so as we can see, we're able to connect its lows. Actually, we're going to connect it like this so that we can get more touches. Okay, we can actually see that we can connect its lows once, twice, 3 times, that thus forming a valid trend line. Okay, now we can also see that aside from a long-term uptrend, there is also forming a short-term downtrend, right? We can see lower lows, a low, lower high, lower high. Now let's see if we can connect a trend line off of it. Okay, we can actually connect a trend line off of this, and now it's forming what is called a symmetrical triangle pattern. But we're not going to go too much detail into what that is. Okay, but basically we can see that it is also forming a short-term downtrend. Okay, now again, guys, trend lines, don't force it. If you're able to connect the lows or the highs, then do it. If it doesn't, means that there is no clear trend line to be drawn. Okay, another example we can take a look at is Dayang. Okay, now Dayang is on an uptrend here, so we're going to look at its lows. We're going to try to connect its lows. Now the first low is here, so we're going to try, the first low is here, so we're going to try and connect it to second low and possibly to its third, like so. Okay, as we can see, the stock rebounds off of that trend line again and again. Okay, now of course eventually it broke out of that trend line, which means that it is an early signal that the trend might be over for now. Okay, now let's look at moving averages, MAs and EMAs. Let's look at UWC. Okay, and let's go to the indicator bars here. Now MAs is basically called moving average. Okay, so let me just pull up moving average. Now EMAs or MAs, that is personal preference. Personally, I use the EMA, and personally I like to use the 20 period EMA, but you can also use the SMA, the WMA, the HMA. It's fine. All right, so what we can see historically that during this strong uptrend, the 20 EMA was acting as very, very nice support, guiding the stock higher and higher and higher. As you can see, the stock rebounds every time it comes into the 20 EMA, as we can see here, 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 and here. All right. So this means that an EMA can also act as a good support as well. And because EMA is ever changing and it changes according to each candle, depending on the period you set, it can either, that's why it is always changing and follows the trend. All right. So now we have seen EMAs as a support. Let's take a look at another example of how an EMA can also act as a resistance, a moving resistance, if you can say. Okay. Now here we have eTronic, which is currently undergoing a downtrend. As we can see, the red line, which is the EMA, during this downtrend was acting as a resistance, rejecting the stock whenever the stock comes close into that area. All right. So what this tells you is that an EMA can also act as a resistance, so much so as a support. Basically like a trend line, but EMAs are more dynamic as it follows the stock, the movement of the stock more precisely rather than a straight trend line. All right, so that's just something to keep in mind whenever you're drawing different support and resistance levels. Now, with that said, let's look at one of the two ways you can actually trade using support and resistance levels. All right. So the first way you can actually do to trade is to buy at a support level. All right. What this means is that you're basically buying at a support and anticipating a reversal off of that support level and ride it up to as high as you can, either to the next resistance or until it reaches your target profit. Right. Another way we can also trade using support or resistance is basically buying on breakouts, meaning whenever a stock has successfully break out of a resistance, the stock is anticipated to go much higher because it has finally broken out of a level that was once a level where there is a lot of sellers. So if they're able to break out of that level, it means that there are so many buyers that are so interested in this stock, hence they are able to just overcome all the sellers in that area, hence the breakout. Okay, so let's look at some live examples of how you can possibly use these two strategies to trade. Alright, so here basically we have Sensov. As we can see, we can identify a clear support in this area where the stock has bounced off of multiple times. All right, let me just extend this so that it's more clear. Okay, we can see that the stock, when it has broken above this, what was once a resistance, now starts to act as a support, as we can see from the rebound here, 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 and here. So we can actually buy near this area whenever the stock comes back into the support and take a buy in anticipation for it to rebound off of that support and rallies higher. As we can see, it has done multiple times. So that is what I mean by buying at support. Now another idea about buying support, which is basically using the EMA as a support. Now let me just pull out my EMA. Now going back to the example that I just said just now, where the stock rebounds off of the EMA, so that could actually be a potential buying opportunity as well. Whenever the stock, let me just zoom in. Whenever the stock rallies and comes back into the 20 EMA, we can actually look for buying opportunities to take a buy in anticipation that it will go much higher or continue its trend, basically, right? As we can see, during this strong trend, there are multiple buying opportunities for the stock as it touches the 20 EMA quite often. All right. Now let's look at an example of buying on breakout. Let's go to Harbour. Now remember how Harbour we mark this zone as a strong resistance, whereas it has rejected the stock multiple times. We can see that once bullish momentum or buyers basically are able to overcome all the sellers in this area and successfully breaks out of this resistance, we can see that the stock continues to trend much higher. So we can actually take a buy at a successful breakout and ride the momentum higher. Now, with that said, not all breakouts are successful. There are many false breakouts that happens in the market, where the stock breaks out of that resistance very firmly, very strongly, but the next candle it just comes back down and closes below the resistance again. So that is what we call as a false breakout. Okay, but I'm not going to go too much into detail on how to properly trade breakouts, as we can leave that for another video. Now, another example we can take a look at for breakouts is MGRC. Now, as we can see with MGRC, it is on an uptrend, but we can actually identify that this is a level of resistance. Okay, let me just extend it to here. We can actually sort of consider this area as well. But this is basically a resistance level that was rejecting the stock whenever the price goes into that level. As we can see, the rejection here, here, again here, here, before finally breaking above that resistance. And as we can see, when it broke above the resistance with this particular candle, the stock continues to ride its breakout momentum much higher and higher and higher. Okay. Now again, disclaimer, not all breakouts are successful. There are ways you can identify, there are ways to confirm when a breakout is a successful breakout. But again, I'm not going to go too much into details about that, as we're going to leave that for another video for discussion. So that basically concludes our video on support and resistance. If you like what I've just shared with you, be sure to give the video a thumbs up and subscribe to the channel for more. And if you have any questions regarding what I've just shared, or if you have anything that you're not clear about, be sure to leave your questions down in the comment section below, and we will get back to you. Alright, so that's it for now. My name is Darren from ChartNexus. I'll see you soon.